No doubt, investing in Cardano ADA can launch you into the realm of millionaires, even though the price is currently caught in an undesirable position. However, do not be quick to forget that Cardano started on the right foot. Everyone was enthralled at the arrival of an ecosystem that was beaming with promises to offer better advantages than Bitcoin. Whether you want millions or billions, adding Cardano ADA to your crypto portfolio is an admirable decision, regardless of when those millions or billions will come. Back in 2018, about 40% of those between 24 and 35 had at least $1,000 in their savings account. That may not sound like much, but a 19-year-old Bitcoin millionaire, Eric Finman, claimed that it was enough to invest in cryptocurrency. Remarkably, the teenager had some luck with the cryptocurrency growing up. He was just 12 years old when he used a $1,000 gift from his grandmother to buy his first Bitcoin. Fast forward to his 18th year, he became a millionaire. In an interview with CNBC Make It, he offered a piece of advice to other young people looking to join the crypto craze. Invest 10% of your income into top cryptocurrencies, especially Bitcoin. I just put it into Bitcoin. I think Bitcoin is the safest cryptocurrency right now, he said. Young Finman made this statement at a time when experts were generally more wary about investing in Bitcoin, given its outrageous volatility. JP Morgan Chase CEO Jamie Dimon famously dismissed the cryptocurrency as a fraud. At the Delivering Alpha conference presented by CNBC and the institutional investor, he said, "It's just not a real thing. Eventually it will be closed." Dimon was supported by CNBC's Jim Cramer. On Squawk Box, Cramer likened the cryptocurrency to monopoly money, acknowledging that it's just pure gambling at this point. I mean, if you want to gamble, go to Vegas. Vegas is fabulous. To this moment, various skepticism has been raised regarding cryptocurrencies. So it's convenient to say that volatility is not the only headwind crypto is battling with. Skepticism is fast becoming an enemy. And this begs the question, should we be talking about making millions with crypto, especially Cardano ADA, when the asset is incredibly down? 2021 was a boom year for the crypto markets. It was the year that crypto, blockchain, and Web3 took center stage. Facebook was rebranded as Meta, banks moved into the space, and NFTs were laced on everyone's lips. The 2021 crypto bull can be attributable to many things. Institutional adoption and acceptance of cryptocurrencies by major brands gave the sector a fresh sense of legitimacy. Low interest rates during the COVID-19 pandemic led to inflation fears. Hence, investors turned to alternative investments like cryptocurrencies. During the COVID-19 pandemic and subsequent lockdowns, most people spent more time online. And notably, that once-in-a-generation event also provided the perfect petri dish for crypto to gain momentum. Since the rolling disaster that was in 2022, the industry has been looking around for the next source of growth. Bitcoin has refused to climb back to its all-time high, and other cryptocurrencies have been dragging their feet on shaky crypto grounds. The industry believes that the next area of growth is in the Bitcoin halving, a major event that takes place every 4 years. It is the anticipation of the Bitcoin halving by investors in the second half of 2023 that can become the main positive stimulus for the market, which should provoke a change in the global trend to an upward one. After halving, the price of Bitcoin always increases, and other cryptocurrencies follow it, an expert said. However, a trend that experts predict in the upcoming crypto bull market is a transition towards emphasizing the usefulness of crypto protocols. This means that investors will focus more on how cryptocurrencies can be used practically in the real-world situations, rather than solely on their speculative value. Plus, Marcus Levin, co-founder of geospatial data firm XYO, believes that the industry has a lot to prove after last year. After the dust settles and people begin to trust the sector again, it will still come down to fundamentals. 2022 poked holes in the crypto ecosystem and revealed imperfections our industry has yet to work through. For another bull run to capture us by storm, there needs to be a restored sense of authenticity, security, and sustainability in addition to a favorable macro environment, he said. Concerning this expectation, Cardano is trying its best. Cardano as a layer 1 blockchain protocol is stepping up its game in terms of the launch of new functionalities. In a recent update, Input Output Hong Kong, or IOHK, the startup behind Cardano Protocol, recently unveiled the first Hydra head has opened on the mainnet, setting a whole new standard for scalability on the proof-of-stake network. Hydra is a family of layer 2 protocols designed to make Cardano more scalable and adaptable for various use cases that require fast and cheap transactions. The first Hydra head recently opened on the mainnet, IOHK tweeted. As contained in a video insight shared by Sebastian Nagel, a developer working on the Cardano Hydra protocol, the aim driving the development of Hydra is to make the parent blockchain more usable by scaling its transactions. Hydra is considered a family of layer 2 protocols that aims to support Cardano's adoption in aspects where cheap and fast transactions are required. The development of Hydra is considered one of the most crucial in the Cardano ecosystem for this year. The news that the first Hydra head is out on the mainnet excited a community that believes this will position Cardano as a formidable smart contract hub in terms of scaling and transaction costs. Furthermore, Nagel noted that Hydra is the first of the protocols that will help Cardano achieve the ultimate scalability it desires. He also confirmed that the Hydra head is not an upgrade and as such is not subject to any hard fork. While Cardano is exploring avenues to make its network more scalable through Hydra, so too are other competing Layer 1 protocols doing all they can to achieve scalability. It's a round-the-clock affair. For example, the Ethereum network is welcoming a series of Layer 2 solutions, including Polygon ZK EVM, Optimism, and Arbitrum, among others, to help in changing the future of the network to allow for more usability. It might sound obvious, but the basic factor to watch is the overall growth in the Cardano ecosystem. This is important because investors have continually complained that nothing is happening on this blockchain. In the mind of many investors, it's a ghost chain, so Cardano has to show very specific figures to switch this narrative. The good news is that Cardano puts out a weekly development report, so it's possible to see what is happening on the blockchain. In the past week, for example, 126 new projects launched on it. There are now more than 1,240 projects on Cardano, and some of them appear to be gaining ground with users and developers. There has also been growth in the non-fungible token marketplaces that specialize in Cardano NFTs. Faithful users want to stay within the ecosystem when buying and selling NFTs. That's a positive sign that Cardano could be gaining market share from Ethereum, which has historically dominated the NFT market. If the growth of new projects accelerates every week, that could be evidence that Cardano is potentially deserving of a higher valuation, and then the millions will begin to come. As an expecting investor, keep an eye on other metrics, such as the numbers of active developers that could signal it's gaining traction. Remember that at the end of 2022, Cardano surprised everyone by being ranked the number 2 blockchain in terms of active developers, trailing only behind Ethereum. While overall growth is good, the main area that is worth zeroing in on is decentralized finance. At the start of the year, Cardano made DeFi a priority, and this is the one area where it always lagged behind market leaders such as Ethereum, so it is imperative that it finally shows growth here. In the minds of many investors, DeFi is the key to valuing blockchain projects. The single best metric for tracking Cardano growth in DeFi is total value locked. This metric tracks how much Cardano is locked in the different DeFi protocols, such as those used for crypto staking. How high can crypto score? Right now for Cardano, the $1 price level is still an aggressive target because that would require it to nearly triple in value from its current price. Getting to even higher levels is almost unthinkable for now. Some crypto influencers caught up in the meme coin hype are now suggesting that ADA could soon smash through the $15 barrier. Others claim they're using ChatGPT to come up with the $20 price predictions. Well, it's reasonable to believe that these ultra Cardano bulls are relying too much on hope and not enough on underlying metrics. This might sound mind-blowing, but you need 300,000 ADA to become a Cardano millionaire. And that's about a target price of $120,000. Of course, we have not seen Cardano reflect any rays of hope or recovery, but at the end of the day, it all comes down to the fundamentals. You heard that right, the fundamentals. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.